All right. Welcome to a new episode, or episode video at least. And today we're going to discuss Microsoft. This time in a different format. Kirill and I are separated via internet connection.
But
But
still
here we are,
together.
anyways. Yeah. We're going to look into Microsoft. They released their earnings last week and they had quite a boost in their earnings and also some revenue growth, which is of course always something really good to see. Especially their, correct me if I'm wrong, Kirill, but I believe their AI-powered cloud tools accounted for most of their revenue growth
Well,
for
it's
this
it's it's
quarter.
it's it's both. So let's put it to start from beginning. They beat on revenue. They beat on the EPS. So both bottom line and top line, which is great. And also they beat on the cloud part of the revenues. So for Azure, the revenues jumped 29%, as you can see, whether the expectation was only 27. And for AI as well, they're just pretty much the first. They have first mover advantage. So like from all what I can hear is like all the companies are actually trying to adopt the Copilot environment and all that ChatGPT integrated as soon as possible. So yeah, they're going good.
Yeah, so really good developments for Microsoft indeed. Also, there was this news a couple of months ago that, of course, their Blizzard and Activision deals also seems to be pulling through. It got approved by the British court, so everything seems to be in favor for Microsoft as of this year. Yeah, so if you want, we can check out what our sheet and our calculations say about the fair value of this company.
Yeah, it's kind of tricky, right? Because as you said, they spent quite a lot of money into buying Activision Blizzard, right? And then you actually need to get some nice returns on it. So yeah, just to actually double check how, let's say, that deal is gonna impact them, how the whole AI development is gonna impact them in the future is probably gonna be quite interesting to look into. Yeah.
Yeah. Yeah, all right. Well, you have the sheet open, I see, so let's dive in right into it. Again, as per usual, you are greeted when you load our sheet. You're greeted with the statistics and a small company description, just for when you don't know what Microsoft is all about. Either way, we can just see some of the statistics. So they have a dividend, quarterly dividend of 75 cents, for example. Let's see what else is cool to highlight. They have a gross margin of a cool almost 69%, which is insane. Yeah, and they have been buying back shares, which is also good to see. So those are the things, for example, that I would be focusing on. And what about you, Kirill? What is something that you that caught your eye looking at the statistics?
Yeah, I think let's say dividend is marginal, which is kind of cute. It's even less than the percent, right? So
Yeah,
it's something good to keep in mind, especially if Microsoft is going to be gradually increasing it, like when the company is going to get more mature. But for now, it's not something you would be buying Microsoft just because of. However, the return on invested capital is actually quite high. 28% is something which is very good, especially given it's a software company. So they are quite, let's say, asset light in comparison to maybe, let's say, Apple, maybe Samsung or some other, let's say, hardware tech companies. So that's good to see. Yeah, and maybe the only annoying thing is maybe that the PE ratio is quite high, around 35. But then again,
yeah,
uh, gotta pay the premium if the company is quite good.
true. All right. So let's dive into it. So for the company foundations, it's green across the board. No surprises there. Revenue growth, of course, we just discussed that. Net income growth, free cash flow growth, just everything in the green. No red
Yeah,
flags so far.
yeah. Great so far. Especially, yeah, as you can see, also the dividend growing in about 10% yearly for the
Yeah,
past 5 years, which is good. Again, it's not a dividend, let's say, champion when it gets to that, but if they're going to be gradually increasing the dividend with such a rate in the upcoming years, that would be definitely nice. So,
yeah, something to keep in mind.
mm-hmm.
All right. Yeah, and then here we see, of course, the income statement, cash flow statement, and some of the balance sheets that we look into. Of course, you should do your own due diligence besides, of course, looking into this. But these are some of the metrics that we focus on. Yeah, if you can scroll a bit further to the other statistics.
Mm-hmm.
So here we can also see just in very briefly how it's doing, and it seems yeah, pretty decent. Of course, net earnings ratio is well above 20%, which is really good. The interest expense ratio is very low, which is something you would really like to see. They of course have a pretty high research and development yeah, expenditure. It goes two ways, right? Because at one point you want to keep your research and development ratio low because it means that you have a pretty decent moat around your company. But then again, it's a tech company, so what do you expect? They provide software, they need to develop it, and of course now with AI coming, yeah, I see this only increasing, of course, or at least not going down anytime soon. Um, Also for the selling and general expense, it's a bit on the high end, which means that they are marketing the products quite heavily. But again, yeah, if you're competing with Google and Amazon, I think it's only, yeah, natural for this phenomenon to occur.
Yeah, but that's also something interesting. You as a consumer, when was the last time you've seen an ad from Microsoft? Just think of
True,
it that way, you know?
exactly. Yeah, but of course, I don't know to what extent they have ads for customers. Let's say maybe their big spending is for businesses, right? For B2B. So
Probably, yeah.
yeah,
Especially probably on the cloud environment,
yeah,
yeah, because you have quite fierce competition with, yeah, as you said, with AWS and Google. So yeah, you're right. That makes sense. Yeah.
yeah. It's just trade fairs, and I mean, I can only imagine like whenever Activision Blizzard goes through what the expenses will be whenever they are organizing their own, if they will do some like E3 kind of thing, right?
Mm-hmm.
So you'll see it back on the balance sheet or at least in the income statement.
Yeah.
Yeah, for the depreciation, it's fairly low. It makes sense. It's a tech company. I mean, they have software, so makes sense that it is a bit on the low side. And then yeah, free cash flow per share outstanding is increasing. Um, which is also good to see. Yeah, nothing really to add here.
Yeah, like just maybe another thing is it's actually quite good to see some green light when it gets to the long-term debt. They're actually gradually paying it down, so that's a good signal, especially like starting from
Oh yeah,
2019. While the cash flow is staying more or less stable, right? Starting somewhere from 2021. But then again, as you can see, they can easily even pay out their long-term debt within a year with net earnings. Like easily, they can cover it and still have some money in the pocket. So that's definitely a good sign from the company.
exactly. Yeah. So yeah, positive so far. Yeah, again, we discussed this. So free cash flow growth. You can see
Yeah.
the sheer numbers here, but we already discussed these, and yeah, it's good to see everything green across the board. It's a good company so far.
Yeah, and as you can see, this is also pretty rare in the Fundsmith investing ratios. Almost all of them are green apart from cash conversion. So this is also something which we noticed only when we were analyzing Visa.
Hmm.
So also maybe something very interesting for you guys to check out later if you would be interested. Um, but when you see green all across the board, starting from return on invested capital, going towards the gross profit margin to operating margins to the interest coverage, the company is doing above the market. So this is something very it's a very good signal that the company has a great moat, and it probably has very good signals in terms of their pricing power. So they can actually, influence the customers, and they can just charge them maybe some additional premium for the products and services they offer.
So in this case, when would cash conversion turn green in this example?
Yeah, that's a good question because they, as we just discussed, right? So we spent quite a good buck on Activision Blizzard deal. They spend money also on acquisition of stake in OpenAI, right? So they are just making these strategic investments for the long term. So I guess this is also something maybe in their own internal target for the strategy to keep it, let's say, more or less the same as the market average. So you cannot really say they're doing bad, right, with cash conversion, but they are just keep on trying to reinvest it into the business to keep the ball rolling. And there was also something which I wanted to show is this lovely thing. So if you guys remember the ChatGPT layout, this is probably one of the most important part of it. So this is the plugins store, which you can just download into your ChatGPT, especially if you have a paid version. But this looks exactly the same as App Store, as Google Play. So this is just another, let's say, revenue stream, for example, right? So they already acquired a new business line of business, and then within this they have already potential to scale it even further. Just for example, just taking a cut from every, let's say, purchase of a plugin, by users, especially if it's for business, right? So this just opens up, endless options how to you can scale your business effectively.
Yeah, yeah, it's promising. Like, I think the applications for ChatGPT are just sometimes they seem endless, right? It's just hook it up to ChatGPT and it will become better.
Yeah, but it's just, yeah, it works, and people are willing to pay, what was it, $20 or $25 per month. I have it. I mean, of course, I share it with a friend of mine, a friend of ours, but still, it's definitely worth the paying $20 or $25 for it. You know. So yeah, shall we move on to the lovely part?
Exactly.
Yeah.
Yeah. So yeah, let's check what the valuation is in store for us. I
Mm-hmm.
believe you have everything open for us to fill in the sheet and to get a valuation.
Yeah, so if we check, let's say, what was the average free cash flow growth for the past 10 years, you can just take it from stock analysis as we usually do, and then we can also check what the analysts have to say on Yahoo Finance. So we just copy, just paste it. So we are talking somewhere in the ballpark of 10% yearly growth. In the past 5 years, it was 12, so that's also something in par with the with market. So let's put 10 at least for now. Let's check what the
Yeah,
analysts
just
say. Yeah,
sure. Yeah, just take the average of all these things, right? Just to make sure that you're encompassing most of the
yeah,
information that you have.
yeah. So if we go to Yahoo Finance and if we check growth estimates, so for next year they project around 15%, and in the
Yeah,
upcoming 5 years around 14. I mean, this is quite optimistic, right? Um,
it's yeah, true. It is, but on the other hand, I think they increased their revenue with 13% in one quarter,
mhm.
right? So I mean, it's yeah, I think it's just a lot of hype, a lot of anticipation because of such a good quarter. But yeah,
Yeah,
let's just do 10 for this, just to be more on the realistic side.
yeah, sure. Yeah, I agree, because also the thing to keep in mind is the fact that the economy is also, the interest rates are still high, so it also affects, let's say, the corporate world. So more bankruptcies are coming up, so less maybe willingness to pay for the services would be there in corporate America and Europe and other countries. So yeah,
Yeah, especially
something
like
to be careful about.
yeah, and especially most of the customers of Microsoft are businesses, right? So
Mm-hmm.
yeah, if the economy is getting worse and people need to, or at least businesses need to, like retrench and just survive, it will have an impact for sure.
Yeah, yeah, yeah. All right. Next, P ratios. I already plugged it in. We just usually track it on macro trends again. So
Hmm.
business as usual. So we're talking about a ballpark of 22 and the maximum of 44, 45, I guess. But yeah, low as 20 and the high of 45, 46. I'm
Yeah.
just gonna plug it in. I'll
No, no, no,
just
it's nah, whatever.
no.
Yeah.
And then, yeah, for discounted cash flow, what do you think? 10 years, 5 years, or?
That's true. Yeah. Again, Microsoft is such a titan and a household name. I don't think it's gonna go anywhere. Not even in like 10 years, right? You would
Yeah,
expect them to prevail. I mean, they're such a huge company.
yeah,
Yeah, I would say just yeah, you can put it on 10 years, but just do 5 years for all developments that are going on in tech right now.
yeah, fair. And I would also put margin of safety, I would lower it down maybe even to 10%, honestly, because again, similar to, let's say, Visa, it's
Yeah.
uh, it's uh, it's a powerhouse. Period.
exactly.
It's really
But then
hard
again,
to move it around.
for you, for example, when you're using the sheet, and then with you, I mean the watcher or the viewer of this video, a margin of safety is just a measure of what you are comfortable with and the risk you want to take. Also, after doing your due diligence, so just keep that in mind.
Exactly. So this is just based on our assumptions, and then of course, depending on your understanding of business, maybe some niche markets which we are not interested or we're not knowledgeable about.
Mhm.
You can just tailor it to your own understanding and information you may have. So, all right. So let's hit the analyze button. So it's just gonna take a little bit of time to process the numbers and spit out some valuable information for us,
Exactly.
meaning to get the valuation. And what do we got? uh yes, quite
Uh,
surprising actually.
I was about to say, I was expecting a higher valuation than this.
Yeah, it's about, we're talking about in the ballpark of $200 actually. And
Yeah,
and even if we're gonna put the margin of safety at 10%, it's gonna be 190. So
yeah,
the biggest probably reason for that, as you can see, is the discount cash flow formula. Yeah, if you, for example, agree with our valuation, or you just whenever you would be using the tool yourself, you can always just save your assumptions and click the save button. So then it's gonna run another lovely script, and it's gonna end up in your watch list. So here you can also leave out some comments maybe for yourself, and just keep track of your companies which you want to follow, which you want to buy in the future. And the same with evaluation tracker. So we kind of pushed a small update to it. So now you will see the fair value which you calculated, and then you can also put, let's say, the percentages when you would think the company is overvalued, and then when it's undervalued, as you can see here. So you can just move it around and just just to whatever you feel like. So yeah, there may be just one last question. Where can you get this lovely thing, eh?
I don't know, Kirill. You tell
No?
me.
Oh, yeah, I'll definitely tell you, mister. You can just go to 930.com if you're actually one of these rare people who are going to be watching this. And then you can just click on Get Access Today. So,
Mhm.
because of the fact that our mission is small, we just really want to make investing easy and accessible to everyone. We are so the initial price is only 15 euros for this, and
Okay.
then for now we're just keeping it only to €1, just to kind of just grow the community a little bit, and just bring more people on board to
And
spark the
also,
discussions.
for you guys just to try it out, because just two random guys on YouTube talking about a sheet that they produced and sharing valuations of certain companies, just for $1, it's not a real big commitment for you to make, and then you can try it out yourself and then experience whether or not it's for you. So yeah, like I said, the barriers is we chose to decrease the barriers for the first 15 people, um, for them, for the price to be just $1. Um, so yeah, just feel free to try it out. You can use whatever payment method you like. So PayPal, Visa. We discussed some of these companies as
Yeah.
well. But yeah,
Wonder
feel
why
free
now, huh?
to so feel free to check it out. And yeah, what would you like to say, Kirill? Is there
Uh,
anything you add?
just of the last thing, I guess. Let us know what you think. If you have any comments, if you like it or you dislike it, let us know. We'll try to process all your valuable feedback. And on top of that, maybe we have a small piece of news to share with you. We are aware of some of the limitations of the sheet. And especially, for example, the time it takes to load things, and the Google is actually just limits the processing power. So that's why we're actually working on creating the web app out of this lovely thing. So stay tuned. Yeah, we're gonna provide some updates hopefully soon, but we'll keep you guys updated.
Exactly.
Yeah, and on that note, I guess see you in the next one.
Yeah. Thank you, and thank you, Kirill.
Yeah, likewise, eh?